What up, OG?
Good afternoon. Good afternoon.
What's up? Welcome to the room. It's PSYK, right? Yeah.
Yeah, thanks, man.
All right. So this will be your first EDU. Welcome. If you have anything you want me to cover or any questions, just hop on and ask or add it into the chat. Let's see here. So last week we obviously do the same as always in terms of weekly recaps, the broader market outlook, top stocks to watch, and swings to possibly watch. Then last week we covered specifically timing, entries, strategies. We did not cover last week the EMA and trendline strategy, and we did touch on Wyckoff basics a little bit, and then we didn't have time because we were so deep into I think we covered option chain analysis and theses. If I remember right, can OG, do you remember if last week we talked about the March 7th chain? Did we talk about the March 7th chain? Excuse me. Was it last week or the week before? I can't remember. I feel like last week took like a month to go. It was a long week, even though it was a short week. I don't cream remember. Okay, all right, perfect. All right, so let's get started. We got 1, 2, 3, 4, 5, 6, 7, 8. All right, a little light today, but that's all right. No big deal. Let's take a look at the weekly recap. And as we do the weekly recap, we're going to cover as we do the weekly recap, we're going to cover the sectors of the market, and we're just going to look at it as if nothing happened. Like no bias, no nothing. Because one thing that I do want to reiterate is it's just really important. Obviously we all know. Oh, let's give a couple more seconds here. Dak, what's up, guys? What's up, Neek? Hey, Neek, how was the golf the other day? You flush it?
Yeah, fucking doubled 16 and 18 for an 80 though, so that's the day.
That's all right. I still solid around. You wipe those out with a par, and you're playing solid.
Yeah, no, it was a good day. It was nice.
Nice, dude. That steak looked good. Way to treat yourself, dude.
Fucking Whole Foods, $62 ribeye, and I was like, "Yep, let's do
it." I love it. I love it. You gotta eat good. All right. So, what we're gonna do today is we're gonna do a little bit of a weekly recap, and then we'll get into the broader market outlook, and we'll touch on top stocks. I'm gonna combine everything into a broader market analysis for us. Okay, and we're going to just kind of cover everything. And one thing I want to really stress is, obviously, Vince is a great trader. He's great at pattern analysis. We know that. However, a weakness that he has, as well as all of us, is following a bias, right? You get overly confident, you have a great day, you have a great week, and then you think you're damn near invincible, or you get a little cocky, and whatever it is, it doesn't really matter. We all do this. But I think this week in particular is really important not to be over biased, specifically to the downside. Just as in the morning on Friday, same setup, right? The futures were green. Everybody in the chat was bullish, very bullish, actually. I know Chase had mentioned, and he's a great trader. He was mentioning looking for all-time highs, right? And I dropped an alert and said, "Hey, let's keep our biases in check and make sure we're open-minded." Because for me, that was a classic setup to fuck everybody. Oh, it's all right, OG. Looking at coming into the open on Friday, and this is a really important point, is does anybody know why I called puts before the market opened? I said, we're getting in puts, we're getting in the 650s for Monday to be safe, and we're going to get in it right at open. I've done this a few times, not very often. Okay, I'll tell you why. Because one of my strategies, and we'll go over this, is called a trend line strategy. And as simple and basic as it may sound, the trend line strat is fucking dirty. It's dirty. Like Clayster knows. He's been in here since day one. Cream, a lot of these guys, OG, they know when this fucking thing snaps and it doesn't reclaim, we get massive fucking moves. Why is that? Does anybody know why you get massive moves from just a basic trend line strategy? And I'm going to get into why I draw the trend line and where I'm looking to draw it. Anybody want to fire away? Why is the reaction so large? Not all the time, but most of the time when we break these trend lines.
Break a structure?
Yeah, kind of.
Kind of.
You're breaking resistance, and it allows it to go as far as it kind of wants to, maybe to prior, depending on how far back.
Good answer. I like it. More importantly, it's an algo. So it's the algos that are holding the trend line that I'm drawing, right? So let's look at the timestamp. This is 15 minutes after the London, right? So this was at 3:15 a.m., right, on this low. So this would technically become the pre-market low, right? Now it floats up, and then right at the 2-hourly change, you can see this right at the mine. This is Eastern Standard, or sorry, Pacific Standard Time. So that'd be 7 a.m. Eastern. Boom! What do? They drop it down. Do you know why this time frame is important on the hourly? It's because certain brokerages open up at that time. And what do people do when their brokerages open up? Psychologically, they get excited, right? They get excited, and they get excited to buy stock, buy shares, whatever the fuck they're going to buy, right? And I think it's Fidelity that opens up at that time. I'm not really sure. But a lot of them open up at this specific time. So a lot of psychology based on pre-market trading, after hours trading, and even regular trading hours happen at hourly changes, because for pre-market, it's a psychological warfare based on how to trap people long or trap people short or whatever it may be. But those algos are triggered off these, they're built-in triggers based on psychology, right? So look at this. You have you're coming down, so let's just kind of walk through this. Okay, so here's the Asian session. It's floating, it's doing its thing. Everybody goes to bed, right? And then they start to float it up. So one thing, let's say here, so here was, where is it? Let me make this very simple. A vertical line. here's the SPX close. Oh, here, here's the market close right there. Let me make it red. Okay, and then here is, all right, so 13 and then 15. So here is where SPX closes. You're no longer able to trade SPX after the yellow line. Then now you have the whole all this everything shut down until, what's that? So 15, it's 2. That's what, when is 17, 15? Yeah. So this blue line is when IBKR is allowed to trade options, okay, for SPX, right? And let's just take a look at the psychology behind this, because this is cool. Because for those that do trade SPX, or ES rather, this is important to understand. Okay, and Johnny is in this, and he's a really good futures trader in the room. He's a great trader flat out, but he's a really good futures trader and understands hourly changes and sessions and how they change and the momentum and how they fuck with people. So market shoots up into close, right? Here it is, it's stepping up, and then all of a sudden the market closes, it comes down, and they just kind of chop it sideways. Then, look at this, then it closes for SPX and it shoots up, floats up, and then what happens? Then you have the IBKR SPX opens up, and instantaneously they rug it. They bring it down. Decent amount from 19, about 4 or 5 points. And then they just chop it. So anybody trying to trade from pretty much the open, right, of the agent all the way, pretty much the whole time. Look at that. This happens a lot. I don't trade Asian because this shit happens. You will get fucked, and theta will just crush you unless you grab, futures. So now let's kind of scroll forward. And I'm gonna get to the point here. Now we have another hourly change right here. 5 minutes after the hourly, they drop it down, and look what time it is. It's 2100. So that's like 11. What is that?
9 a.m. 9 p.m.
9 p.m. So everyone's asleep, pretty much, or most people are asleep by this time, right? And if you traded anything from close to this time, you're fucking irritated and you're frustrated. You're probably stopping out. Right around, there's 2 times, 9 p.m. and then the 12, it would be 9 a.m. or 9. You talking EST, right? This would be 9 p.m. EST. Yeah, it would be PST. Yeah, so 9 p.m. is a time frame that they set the low, because a lot of people are either going to dinner or they're shutting it down for the night, and then they set a low and actually give a trend, right? And sometimes the pattern changes, but there's always a pattern, and the pattern is either they set the low here at 9 and they run it up, a nice run up, really nice return into what? It's 11:30, I believe, p.m. And then they rug it through to the London and then bounce it. So, these people up here that shorted this are going to get paid, the people that long it. Now, once you see the London open and you see a low get set, because sometimes they don't set the low off the London. Sometimes they'll do this. They'll bring it down. They'll just moon it, and then they'll chop it, and then they'll drop it down, set the low, and then this will be your algo trend line like that. They'll set the low at like 6 a.m. Eastern, right? But in this particular instance, they set the low right after the London opened. So when they do that, and you're coming into the market open, you're looking for the next low. Like ideally, you're looking for a wick. They gave us this wick. Now, as soon as this wick was drawn, we weren't even open, and the market was breaking it down. So that was my cue. Algos were holding. And then I looked at the option chain, you guys, before the market opened, and it was structured bearish. Okay. Also, I mentioned too, our risk was 61.20. We needed to get into puts as soon as fucking possible. That means as soon as the fucking bell rung, you get the fucking puts. You get in 2/3 size, and then if it drives up, so here's the open, right? It opened at 15.6 roughly. And that was my fill right there. Because I knew, and I had this trend line drawn, that if they drove it up, they would have to reclaim 61.20, which is right where the algo trend line was, which could be a retest and fail. So you have two setups here. The trend line strategy offers a few ways to play it. Number one is called the tap and go, right? Excuse me. So you're not playing this, and you're not playing this, but now you have your trend line. So if price comes down to here and starts to wick up, you can take it long, or you can wait for if we get a wick here, and then the next candle starts to build structure, you take it long, risking a break of the trend line. Okay, so your risk would be very well defined, as close to that possible. So that's called the tap and go. Here's your tap, you got the trend line, and it taps again, starts to wick off. You don't long it coming into the trend line, you long it as velocity of price. So if you look at the price, right, and as this candle came in to here, it slowed down. In the moment, it was slowing down into this, and then the candle started to wick up. You either catch the wick or you wait for the next candle to open, and then you take it long, risking the difference of the trend line and a break below. Okay, that's strategy one. Strategy two, so everything that I'm teaching, all of it fucking ties into everything. Everything is like, it's like a glove, okay? The trend line strategy, the EMA strategy, the swing strategy, reading the chain, all this shit works together. So here you have the tap and go. But now the second trend line strat within this trend line strat is the breakdown, right? You have two types of breakdowns. You have a breakdown where it breaks and does not retest. And that's what it did here on the 5. It just broke and flushed. The second type would be a break and then a failed retest. So the retest comes up and it struggles, and you see a doji, or you see come down, goes up, wicks, starts to build out what? A bear pennant or a bear flag off of it. I see this a lot too. So what you'll see is price breaks down and it'll come up, trap people short in the hole, and then it will just walk right above the trail line, just like this. And it's just building this massive flag, and then it fucking flushes, right? Or the third one would be a fake breakdown. And that's a little trickier because you have to read how price and volume are reacting at that level, right? So if we know 61.20 is a big fucking spot, right? We know it's the motherfucker spot, right? So I don't know why I don't have a trend line there, but let me just fire one off. Yeah, so 61.20 is a big spot. All right, so when we know this, it could come down it breaks the trend line, comes up, retest. Well, you have the ideal thing is like, okay, I'm going to grab puts here as long as it doesn't reclaim 161.20 on the 5. That gives me the best opportunity to catch a really aggressive move down, right? So now within the strategy is the EMA strategy, okay? And there's different layers to this EMA strategy. It's very, very, very simple, okay? I use the 13, which is in dark blue, the 21, which is in green, and then the 200, which is in yellow. Okay, 13, 21, 200. Okay, my swing strategy is built around the 1 hour. Okay, but when you're using the trend line strategy and understanding the EMA strategy and how price can react in terms of compression, you'll understand and be able to manage your trade very, very easily and understand how to, most importantly, read the price action and the volume and understand what's happening from a supply and demand perspective in terms of who's winning the battle, buyers versus sellers. So let's take a look at this now. This is a pre-market trend line drawn. What happened? Okay, well, I knew that this was a massive pivot at 61.20. We broke it in pre, and we say, hey guys, we're getting inputs for Monday right off the open. If you want to do zeros, you can, but right off the open. And if they drive us up to 61.20, I will add more, risking 61.20. Okay, meaning I need to see a 5-minute close above it for me to get the fuck out. And I'll take that loss every day of the week. Okay, why would I say that? Okay, because in pre-market, look at these EMAs on the 5. They're fucking diving, right? They're diving down. I have the chain in my back pocket and I know they're positioned for a short move, right? And I've got the algo trend line that's broke. So now I've got the chain as one fact. The trend line, algo trend line, there's another fact that's broke, okay? Selling pressure with no velocity coming in from the buyers in pre-market on that as we're underneath that 61.20 level. There's zero buying pressure. You can clearly see that. So let's move this RSI up and out of here. Okay, and just look at the volume and price action. Then we have the EMAs already in pre-market, which have got the crossover. So that means that the 13 crossed over the 21. And they're crossing over the 200. Another important thing to note is the verticality of the crossover. Is it just kind of like this, or is it diving? These are diving, right? And price got vertical to the downside. It wasn't like price kind of just floated down. No, this fucking price just dove. That is significant. That is the velocity of a move, right? So when you see that in pre-market, your risk is well defined. That's why we took the puts at open. And then the first target was 6100, then 6090, then 6086 to 6080. If 6070 broke, then we get a fast move down to 6045 to 6050, which was which would magnet based on gamma structure and what I was expecting on the move. So 6070 to 6075 was a zone that was a previous huge zone, and I knew that would act the same way down there. So as it comes down, price crosses over. Now, if you think about it from like a compression side, right? These EMAs, it's really interesting because when price falls under them, it's harder for price to regain momentum and go back up. It can, but the buying pressure, the volume has to be significant enough to drive price back up above. So otherwise, what's going to happen is every time this thing gets driven back up, sellers are going to step in and fucking drill it. So to be able to curl these EMAs back up and get price restructuring higher, you're going to need significant buying momentum. So as you're reading price action, these are things that you want to have in the back of your mind and be kind of analyzing in the moment. So these are the types of things that we're coding some a specific program to for the room. All right. Now, as we come down, you can see that price just drilled right into that zone, the 6100 to, let's call it 6090. That's the zone right here, 6088, 6100, the zone. With price spent, roughly 35 minutes in the zone battling it out. And you can look at the buying volume. One thing that you want to think about, like let's say, for example, let's say Big Cat got in this trade with us at the open. The algo trend line breaks. He grabs puts right here, right? He flushes. And he's like, I'm Tommy Tough Nuts, Big Cat. I'm grabbing zeros, right? Now he's up 200-300% off the open, probably more. I think at that moment I had Monday DTE because I was sized up and I had my son, so I was trying to be a little risk adverse. So at this point, I was up, I think, like 70-80%. So zeros would probably be at 300-400% at this moment. And as this happens, now your contracts will explode to like 700%. And then all of a sudden, they're back down to only 300%. Then they're back up. And so what you want to be doing in your head when you're in a situation like this is you entered here, okay? You know the EMAs are crossed over and they're trending down. You also know that you have specific key levels, okay? And as price flushes and breaks, 6104, 6100, right? Now what you really want to be thinking about in your head is, okay, all right, I see buyers coming in, but they need to change the structure for me to get out. Key question, where is the place where if you took say a 30% trim here, right? Where is the place to move your stop to, right? You could have your stops at break even, right? Or you could say, all right, where's a safe place to put my stop? All right. Well, I could do a couple things. One would be after you see this massive wick, I could draw a trend line. Okay. Once you see this wick, you draw the trend line across it. Okay? That's one way you could do it. Okay. Or what you could do is say, we need to reclaim on the 5-minute above the 13 and hold above a significant level before I get out of my fucking runners of 70% runners. So that would mean that price would have to do what? It would come down here, chop, pop up, down, start stair-stepping out and create a trend up. Then it would take time. Your contracts would not go down. They would probably be hovering at 150 to 200% here. Then you say, okay, where can I define my risk? Okay, you look to the left in this zone, right? You notice this massive wick right here. This is a big deal, that wick. Why? Because that wick lines up with this candle close and this candle open. It's a big, big, big deal structurally. So then what you do is you say, okay, if price gets above this level and can close above 6099.9, so 6100, I would give it breathing room to be able to possibly reject this zone right here. This candle close right there and this candle open. That's at 6108 because what they could do, they could shoot it up, liquidity grab, stop hunt just above it to the 2, and then dump it even more. So the last thing you want to do is put your stops right at 6100 because you see this wick there. You put it a little bit higher and you say they need to close it above this on the 5. If that happens, you make still 75 to 100% minimum on your contracts. And if you scaled 30% at 400%, you should be able to afford to do this. This is like the next step for a lot of you guys who are like getting better at reading price action. You guys are making money consistently in the room. And for those that are new, this is the shit we do in here. We do not guess. Okay, we strategically manage our trades. Okay, and yeah, I'm going to be in the room, be alert and scale. But once I set that scale out, okay, I'm going to be looking at a lot of other stuff, and I can't sit there and be like, okay, yeah, trim at 150%, trim at 500%. I'll do it in terms of what I'm doing, but once you get that massive move, let's say it goes well over 30%, that big nice move, and you take that first trim, or in this case it hits the first target and you're up 400%. Now it's your obligation to manage the trade like a fucking G. Okay, not like a pussy or a mental midget, like a mental giant. You have to learn how to do this, because what happens if I die tomorrow? Or were you just going to go into another room and take their alerts? Like, you want to actually learn how to do this step by step and read. The most important thing in the market is focusing on what pays you money. This is the shit that pays. Okay, not following a flow alert blindly. Like, that stuff doesn't pay. Okay, this pays consistently. Okay, and it's not difficult. You just got to hear it a few times and you got to apply it in the moment. In the moment. The only thing that matters is how well you groove your habits in the actual moment when it counts. And this is what I'm talking about right now. We're in the moment. You have to be thinking this. You put your emotions aside and you think, okay, all right, structure's good. We're flushing. Okay, shit. All right, I got to get ready to scale. How much do I want to scale? Okay, I have 3 contracts. I'm going to scale 1 or 2 here on this move, and then I'm going to manage my other contract and do it as best as I can without getting stop hunted, and let's do it strategically. And this is how you're going to do it. Then, now let's move into the trade. You don't get stop hunted. Now it moves to the next level. You have more contracts. You can take another trim here, because why? Because I said 60, 70 was a big fucking level. So you take another baby trim there, because you don't know, nobody knew this was going to break. I said, if it broke, it's going to go fast down to 60, 50. Okay. So nobody knew this was going to break. And if they say they do, they're full of bullshit. Okay. So next, what thing would happen? They drop it down, and you have to expect this move, this big bounce. You have to. This level's too big and too important for it not to. Coincidentally, this level was February CPI high print from the data candle. So we bounce off of that print. And then what does it do? It goes right back to this wick right here, these massive wicks. And what does it do? It rejects 1, 2, 3, 4, 5 times. 0 fucking reason to get out of your trade. 0. Okay? You watch it. You just watch. And you sit there with certainty, because you're not emotional. You're looking at structure and price. Yeah, there's buying volume clearly down here, but it's not enough to change structure. It's just not enough. So now 60.88 becomes resistance. 60.90, 60.88 to 60.90 is resistance. Now it starts to weaken, and then you get the move into the structure, and it's weak into it. So now we break it. Now, if you miss the trade, I said you can take puts. I said this live. You can take puts off of a rejection on 60.70. So when you say reject, you mean the candle not closing above the EMA. So yeah. So if your stop is above, let's just say it's above the 21. Let's just say, for example, on this case, it's above the 21. Okay. Because at the end of the day, we have to expect a mean reversion. What's a mean reversion? So Candles are flushing, and now at this point we're at 70, and the EMA at this point is at 88 roughly. So that's a 17-point extension away from the 13 on the 5. That's on the 5. Look at this 15. I'm getting to your question. Just hang on a second. I'm going to tie it all into one. So on the 15-minute, at this point, the EMA at 13 is at 6,100, 30 points away. You 100% have to expect a reversion. So extension, you expect the reversion back in. Then the move comes down. If it's a downtrend. If it is not a downtrend, this tweezer bottom will structure out and build like this, and it won't reject this EMA or this downtrend. It will structure and then start to buying will continuously come in. But you can see that here's all sellers, buyers, and then they're fucking gone. They're gone here, and they're nothing happened, and then they're gone. That's when you know it's coming back down further. Does that answer your question? I hope it did. If not, I'll reword it. Stan Teddy Bear Thunder or Teddy Thunder, Big Teddy Thunder. That answer it? Okay, cool. All right, so then I said, hey, if 60-70 rejects, take it short to 60-50, to 60-45. You have plenty of time to get in. Plenty of time. I think Vince took it short from up in here, yeah. And so you have plenty of time. Look, it dropped down, broke it, came back up, retested it, failed. So you had 5, 10, roughly 15 minutes to get into a good short, right? Plenty of time. And then you take the next leg down, and that's the Flusharooski, 30 points more down. So, this is a 100-point move, and we caught about 90 points of it. And that's how we did it, right? So that's the EMA strategy. That's the trend line strategy all wrapped up in one. The EMA strategy has other things to it for swings, but that's how you really want to be thinking about managing your trades. It's really, really, really important. Anybody have any questions on that?
Hey, Sales, Winter here.
Yo, what's up?
Hey, so it was a confluence of things that gave you the put entry. When the algos drop down like that, it's kind of like RS's 805 print, like they're kind of showing their hand pre-market. Is that what I'm understanding?
I mean, for me, it's more of just, okay, this is a key trend line for the algos. It's broken. I really don't give a shit about the EMAs as much because it's just a reflection of the price to me personally. And then I'm thinking in my head, okay, we're under a really, really big fucking level. Like, how can I get my risk as super fucking tight as possible? Right? I'm not trying to buy this. Buy it for it going up. Why am I not? Well, in the back of my head, right, I'm thinking in my head like, okay, well, I knew that the bigger run up from last EDU when we talked about it, plus on Tuesday pre-market write up, I was saying how if we get a run to all-time high before Thursday, that we would see weakness Thursday and Friday, right? After VIX expiration. It was either going to be one or the other. It'd be either they dump us into VIX and squeeze us into OPEX, or they rip us into VIX and then dump us off of up or dump us into OPEX. And so I had that in the back of my head. Plus, like in terms of price action wise, I was like, okay, well, if I get into puts right at the fucking open and I get by Monday time, even if they drive it up to 20 and reclaim it, I'll probably only take a 15% or maybe 20% hit, right? So that's a risk management strategy.
Right.
And then if it does weaken, I can add more to the position because that's right at where the trend line is. That's what
Right.
was going through my head in the moment.
Okay.
And it's a big fucking level. 6120 is a big level. You know, the AI had it as a massive spot too.
Right.
So, and the AI is kind of me because I'm coding it, but so that was a big fucking spot. So there's
So
all these little things. Yeah, I played Monday. So in pre-market, I called the 60/50s for Monday.
yep.
I typically take zeros, but I had my son Novocaine, and sometime when I have my son, especially up the morning when I take a trade, I, he could take his shit, and then I got to change his diaper, and something could happen, like, he turns off the computer or something, or whatever may happen, crazy shit, right? I have my son week on, week off, so and I'm interviewing some nannies to check out, see if I want to do that, but he's 17 months old. So, I'm not going to not take a great, amazing trade. So I was like, you know what? Hey, let me just be a little safe. I'm not going to get smoked if I get into this, and I'll size it down. And that's why I did that. Plus, for the room, I liked it because it's easy to manage. Contracts were $400, $390 a piece at that point. These closed out at 3,600. Those Monday puts hit 1,000% top to bottom, from alert to close. So we didn't need in this moment, we didn't need to take zeros. Yeah, zeros would have been fucking amazing, great. And I said, hey, if you guys want to take zeros, take zeros. No Scoppin took zeros, and so I don't know. I think other people might have too. So that's kind of was the reason why I played those also. So and it's easier to chill in it. Go ahead.
Oh, I was gonna also ask about Thursday. Well, on Wednesday, you told us all your buddy was selling and trimming his port, and that we should
Yeah.
expect some
Yep.
downside. I
Good
remember
memory.
that. And
Yeah.
then Thursday pre-market, we hit all-time highs and you tatted and then dumped, but we were able to. We did like 50 points and we reclaimed, but we weren't able to reclaim the previous high. And I was
No, we
looking
didn't.
back, right?
I don't think we did we? No, we never
No,
reclaimed the previous side though.
no. And so I was just looking back at this, thinking, was that like the canary in the coal mine on Thursday that we were going to have a bigger sell-off on Friday, being OPEX and all these confluences of events coming on. And go ahead.
I don't know necessarily, but what was happening Thursday was this to me. Based on charm and what happened off the open, like this is a little different situation to me because massive quick flush, like really, really, really fast, like overly fast. You have an extension here, 84, and EMA's at 6,100. Like that's a huge extension on the 5 minute. That's big on the 5 right off open. Sus. Not real. Like not. We're not going to sustain that. It's not possible. You even look. Let's fast forward or let's go back to Friday. They didn't do that. They didn't do that. It was controlled. Sell, flag, sell, flag. Look at the difference. See the difference?
Yeah, huge difference. Yeah, I
Huge
see it.
difference, right? And
Yeah.
then so also when I saw that extension, I'm like calls off of 90 all day fucking long. And I
Yep.
was saying it earlier in the week, the first time we test that 90 level, take it long. As long as 90 holds, we will revert. And I mean that returned like, I don't know, for like 45%, nothing crazy. But then and then I was like, hey guys, we're gonna get fucking chopped up. Why would I say that? Because based on, first of all, the positioning on the option chain wasn't bearish for the day, number one. Number two, the IV on the puts was rolling off through this whole section. And I was watching the IV here and watching it roll off. And I'm like, oh my God, these assholes are going to fucking rip it because the charm is decaying the puts. So I'm watching the charm decay the puts plus time. And that's why I said, if we hold 60.85 into the 2 p.m. algo, we will see a ripper to 12. If we get to 12 and hold, we could go higher. So let's play through it. We played puts, or no, we played puts for a scalp, and then immediately we flipped. Where was it? Where the fuck was it? Let me see here. It was right here. Yeah. It came, no, that wasn't it. No, yeah, this was the section. So we took puts here. No, that wasn't it. No. 1694. No, I think it might have been this spot. Yeah, this looks more familiar. Yeah, because we hit 240%, 220%, something like that on calls, literally in a second. And it was right there, boom, and fucking ripped. And we all got out. It was, and then it kind of chopped or whatever. And then this move on the 2 p.m. algo, or the MOC algo, at the end of the day, I think Neek hit 400 some percent or something crazy because he straddled it. And I said long was the play as long as we hold over 60.85 to 60.90. So when you have a situation like this, it pops down, drives up, comes back down, and holds. You could say, yeah, it's a double bottom. But you could also say, okay, what's happening to the actual market? Like when I say actual market, I mean the math underneath the market. What's really happening is negative gamma spikes on that move. Then it neutralizes. And it spikes again, and now it's starting to neutralize. What's happening in this fucking zone right here? What's happening is people that are in 60-70s, 60-80 puts, and 60-90 puts, and even 60-100 puts are losing money. They're decaying, right? Because and you can see that based on the vol on the vol. So vol on vol is, anybody know? It's the volatility on the IV of your contract. Market makers they'll price, they can actually price the IV of your contracts. They can price it higher and price it lower. And this is how market makers get to quote unquote delta neutral, right? And so they manipulate the IV. And when you can tell what's going to happen, because if you see the IV dropping on the contracts and you see price stagnating in a tight range, you can assume that there's decay on either side on both sides of the chain, right? So when that happens and you're above a key level, when charm kicks in at the 2 p.m. algo, you get upward pressure, right? But there's a cap to that upward pressure, right? And if it hits the cap, then it gets suppressive unless it gets reclaimed above that cap, and then it accelerates it higher. Does that make sense? It's like so you're like in those situations, you're reading key levels, how the effect of the Greeks are affecting the actual option chain, and how the market makers are pricing the options that you're trading. Okay, sorry, that got a little technical, but try to keep it simple, but that was kind of important. So, all right. So now let's get out of here. So you got the trend line strat, and then we talked a little bit about the EMA strat. Now let's talk about the market. All right. So, yeah, shoot.
I was just gonna comment on your golden pocket. I drew it out that on Friday morning, and price stopped precisely in your golden pocket.
It's pretty wild, right?
It was wild. I was like, my jaw hit the floor. Actually, I was like, man, that golden pocket is real shit. So, kudos to you on that one. I'll be putting that on the chart every morning.
Yeah, yeah. So you should learn how to draw it. Okay, you just take in fibs and you go from all-time high to my anchor on the low. The anchor is the recent significant low, which is the Monday low of January 13th. That's where I have the anchor of those fibs. And the golden pocket is adjusted through this whole range based on where the all-time high went. That makes sense?
Yes.
All right,
Yes.
cool.
Thank you for that.
But yeah,
I really
that's
appreciate it.
yeah. The golden pocket's golden.
Golden.
Yeah, it literally price stopped right inside the golden pocket.
Stopped and consolidated there for the rest of the day.
Yep. And everybody asking for lower, got greedy, got fucked. All right, so let's take a look at the bigger picture on the bigger time frames. This is the daily. Okay, definitely significant selling. To me, from an all-time high perspective, put aside the fact that my buddy, who I'm going to say that he does the buying and selling for one of the largest hedge funds in the country. He not only does the buying and selling, but he is a really important part of that fund in terms of, he manages the books at the end of the day. And, when there's something significant, he calls me and says, hey, this is what we're going to do. So what happened? On Wednesday, he gives me a jingle and says, hey, we're going to be selling about 15% of our whole portfolio, which is roughly like $100 to $200 billion. And they're going to start scaling out. And he goes, the most important part is we're not buying. We're done buying right now, right? So this CEO is friends with Jamie Dimon. He's friends with Ackman. He's friends with the round table of the round table for the market, right? So if he's playing golf and he has a weekly call every fucking week with these people, and this fucker is not buying, and this fucker is trimming that much, which is the most I've heard in over a year, he goes to me, I go, okay, well, what's the likelihood of a pullback? He goes, well, typically we see a 2 to 3% drop within 10 days when this happens. What did we get? About a 2% drop from all-time high from that call, right? 1.79% on Friday. So, and probably another 0.25% on top of that from all-time high puts us at 2%. So we have obviously the luxury of this, intel, if you will, right? And, it's not even intel. It's just, shooting the shit with somebody and he's like, hey, we're taking a little trim. Be cautious. So, and that's about it. So then let's take a look at the structure. To me, this could be a warning shot to the market, like not to retail, but like to like smart intel trade, smarter traders. You have a warning shot down here. You have one here, not really one here because of the wick, but this is a full body bearish engulfing daily candle from a consolidation top. As a Y coffee, and you'd be looking at this as a true UTAD, right? So, but we don't really want to be so overly biased. The golden pocket is the 0.65 fib between the 0.65 and the 0.618. I'll give you my fib stats, and I'll post them in here. Hold on a second, shit. So those are the fib stats that I have. And then what I do for to get an accurate read, I'm different than RS. RS has the statistical data, and he does it on multiple time frames. Honestly, like for me, like that he's amazing. He's a great trader. But for me, I don't need more shit in my head. And because if the more stuff that I have to look at and analyze intraday in the moment, that makes me slow. And I have to be as fast as fucking possible for you guys, for everybody, for myself too. I don't want to be thinking about, okay, well, I'm at this level or this ZZ or whatever it may be, right? Because that's his strategy, and for my strategy, like this is just simple. Like, okay, I'm gonna draw my fibs anchor high, all-time high, and then anchor significant low. To me, a significant recent low was here. So I fib it off of that, and then that becomes then my golden pocket. And obviously, as we were at this all-time high over here, right? So my fibs were this way. I'll take. So I'm not gonna fuck with it here. I'm gonna just pull another fib set up. So when this low came in on the 13th, the fibs were like this. Oh shit. Yeah. This is fine. The fibs were like this. So my golden pocket was right here. Watch this. I'm going to blow this up. You see how thick that is? So my golden pocket was right here. So look at this. So as we hit this anchor low and we started to move up, this is the fib set that I had. So we popped up and look at this. We rejected right at the bottom of the golden pocket, came down to the 0.5 fib, held it, ripped back up, came down, and then you can see, this is on the daily. Then on the daily, it came down, tapped the golden pocket on the top, then fucking ripped, right? And then as we keep going and stair-stepping back up and out, then we make a new all-time high, right? Then what do? Then I take the golden pocket and I raise it up to that all-time high. Then what happens moving down? Tap of the golden pocket on the bottom, shoots up, comes down, and you see this action that's happening. Like, look at this. This 1-2, tap of the golden pocket on the bottom, rips up. And, all the way through. Same thing here. Tap of the golden pocket, tap of the golden pocket, and then we move up. This is the power of how I fib shit out, my way. Okay? And I'm not taking anything away from RS. The guy's a fucking beast of a trader. And his strategy is fucking awesome. Awesome. Right? But he is a fib trader. I'm not a fib trader. That's not my thing. Okay? That's the golden pocket, and that's how I navigate it. Make sense? Cool. All right, so let's get these EMAs out of here. Okay, now I'm just going to scroll around, and I'm going to show you what I'm going to look at right now. Okay, so we're going to do a broader market outlook. Okay, and before I even get into this, I'm going to say one thing. Okay, there's a lot of for our whole room, for our community, ideally we want to be 100% all aligned. My goal is to have everybody always aligned in the same direction. All the pros saying, hey, this is where we're going, this is what we got. But that's not really realistic, right? The one thing that I will make sure is that it's not uncertain all the fucking time. My goal is to keep the direction very, very clear on what we are seeing 90% of the time. And we've been able to do that since day one. Okay. Now you could have, RS could be like, we're going down. And Vince could be like, you know what? We're going down. And then me and some other other pros are like, I think we're going to go up. I'm leaning up. And that's fine. But in those instances, do not marry your bias to anybody. Even if the chart looks fucking pretty, do not marry yourself to it. That's a fucking trap psychologically. You have to be smart and not do that. Okay? You can't. Even if you're taking an alert, because your mind will function based on any hint of a bias, and you'll fuck yourself. I guarantee it. Even if the alert's a perfect alert and you get the fucking entry, you'll fuck it up. I guarantee it. It happens. Okay? So just it's okay to be neutral all the time, right? You know, we lean bias, but we're neutral, right? And there's some pros in the room that are biased, and that's fine. That's how they trade, not me. So now let's take a look here. Now, for me personally, we are in the golden pocket, right? From all-time high to a recent significant low. Okay, January 13th. And based on how the sell came in on Friday, and based on structure key levels, what I want to see moving forward into next week, and there's a couple scenarios that I'm looking at. Okay, all this stuff is recorded, so you'll be able to go back over it if you want. But I do not want to be aggressive early in the week. I want everyone to be very patient. If you miss the big move Friday, be even more patient. Okay? Because when you get a trend day, typically trend days are followed by chop. At least, I don't have the stat on it, but it's probably 90% of the time you get chopped the next day. So we had a significant trend line break. You can see this trend line I have here. Pull up the 4 hour. Okay. And what's interesting is, look, a retest of it, right? Failed. So could this be a fake breakdown? Possibly. It could. It could possibly be. Now, let's talk about some stuff. What I am looking for either next week, early in the week, is I want to see if we can reclaim 60-45 SPX. Not US 500. I want to see 60-45 on SPX get reclaimed. If that gets reclaimed, then I really, 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 really want to see a test of 60-70 to 60-90 zone. That fucking zone, I'm not biased, but I am not interested, you guys, in shorting, actively swing shorting or aggressive unless that zone gets tested. Now, if we pop up to 60-45 and that starts to weaken intraday, yeah, we'll fucking scalp that bitch short. That's fine. Or we pop up to 60-20 weeks and then it gets down. Yeah, we'll scalp it short. That's fine. But what I'm interested in is a motherfucker swing. A motherfucker swing is, I want to see that zone get tested, and then we will be taking out a minimum of 2/3 size swings short off 60-80 to 60-90 zone for March. Okay. If it doesn't get tested and they keep flushing it, then we will be cautious. We have NVIDIA ER number 1 next week. We also have PCE data next week. We also have a bunch of bullshit that has been flying around on Twitter, like, oh my God, Jamie Dimon sold X billion dollars of shares. Oh my God, right? That's a bunch of FUD, right? Fear, uncertainty, and doubt. You know, and typically when you see that, that gets people very biased. People are thinking in their fucking head over the weekend, oh my God, this is going to be the most aggressive sell. Oh my God, we're going to dump. Oh my God, Jamie Dimon, blah, 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 right? What people don't realize is that doesn't mean shit. They can move the fucking market up without his shares in the market. He could be buying fucking SPY, pushing it back up with the shares he literally just sold out of JP Morgan, right? And then continue to dump them back down. So those news bombs don't mean anything. So what we really want to do is set ourselves up so we're open to all possibilities. If they flush us to 6,000 to the bottom of the golden pocket at 6,003.4, and that holds, we're taking that bitch long. Okay? Right? Think about it. The reason why, let's look at this RSI now. I have a lot of lines on here. Look at this thing. Okay, so massive bounce, decent sized bounce, chop and then bounce. Massive fucking ripper. Ripper here, and now we're really extended out away from the signal line. The signal line is the yellow line, and the RSI is the blue. This just works to me just like the stock market. We talk about extensions. If this was the EMA, okay, and this is price, we get way down here, we expect a reversion, right? So I treat the RSI like that too. The signal line is the actual EMA. The RSI line is the price action. I expect a mean reversion. Doesn't have to test the signal line, but I expect it to revert a little bit. And this is the 4 hour. It doesn't get buried like this very often. Okay. Take a look at the 1 hour. This thing's in the dirt. It's almost at my deep reversal level. Very, very low. Let's take a look now. Every time that it's hit this level. Oh, shit. Let's take a look every time this thing's hit this level. Let me move this up a little. Okay, now let's take a look at the price action. Okay. We grab arrow. Lock the tool. Okay. Right there. 1. Same spot. This move was from 59.17. And it shot straight up before any significant sell. That was a 50 point move. That was 130 point move. 120 point move. 120 point move from this spot, you guys. When the RSI was here on the hourly. Now the RSI was slightly above it here on a gap down. So that's there. And what happened? Over the course of Monday, less than a day, it ripped to another 130 points. Okay, from this zone. Okay, so these are just 2 instances. I can go on and on and on and on and on. Okay, let's go back down here. Same thing. Here it is, right there. And here's the extension down. All right, and that was at 58.90, and it fucking smoked it right back up to 59.34. So that's like a 45 point move, right? So you try to short the hole and you get smoked 45 points up, you're getting roasted, right? Now, then they made so they popped it up on this situation, and then they drove it down and made a new low. And then after that low from 5,800, they ripped it straight in everybody's face, about 80 points. No, more than that. It was 5,800 to 50. No, that was almost 200 points. Yeah, that was insane. And then it kept going up. So all I'm saying is, you have these situations here where we are at on the hourly RSI, where I've played the market long enough where I don't fuck with this shit, guys. I'm not here to sit here and throw guesses out and be like, yeah, we're gonna fucking drill. Yeah. No. I'd rather sit on the sidelines and be patient and then wait for when we all have such a good edge to take a trade, and then we get in and then we execute, based on where we are at. And Johnny fucking knows. He knows how these RSIs move and how it fucks people, right? And so he has enough RSI experience to understand this. And so think about it. We're in a golden pocket. We know the typical reversion comes from the golden pocket typically. Could we gap down underneath? Yeah, absolutely. Could we keep flushing? Yeah, absolutely. We could. But, the likelihood isn't with us, really. So that's why I'm saying I want to see this zone up in here. This zone right here tested, the 60-70 to this zone, 60, 87, 89 level. That zone, I want that fucker tested to see. That would make this RSI do this. It would revert. And the signal line would be right in here. Then we could consider taking a nice short off a risk level. It would also drain out IV on puts, and the VIX would cool off. I haven't even looked at the VIX yet. It would neutralize things a bit. It would trap assholes trying to short the hole from Friday, right? And it would really put even people that shorted off 50 and got it to the bottom and they swung it, they could get cooked too. So these are things that I think are very important to take note coming into the week. Plus, do you really think they're going to run this fucker down to 5,900 or 5,950 before NVIDIA ER? If they do, we'll most likely long through NVIDIA. Most likely. But I would like to see us long stuff like NVIDIA, or possibly, other things like Apple or AMD even, for a bounce into NVIDIA ER. And then I have statistical information just like our GRS does. But I don't know if you have this stat, but 100% of the time, I think it's 100, probably I'll just say 90% of the time. It's pretty fucking close. But I'll just say almost every single time, you guys, we have had a semiconductor report earnings, the whole market gaps up. And what happens on the gap up? The market reacts to that particular stock. Think about it. I can go through them. MU earnings last year, gapped up, fucking ripped the whole market. And then TSM earnings. We actually played a fun one on TSM, this last earnings on TSM. It was, hey guys, this is the pre-market plan. Another semiconductor reported earnings and gapped us up. This is what we're going to do. We're going to take puts off the SPX if TSM fades off the open. What did we do? Opened up, watched TSM, looked at our levels on SPX SPY, started to weaken. TSM started selling. We fucking took puts, and they fucking drilled the market. It went 200-300% in literally 5 minutes, and we were done for the day. Like chilling. And then we let everybody else get fucking chopped up the rest of the day. So, to be overzealous and get all excited coming into the week, I think we all need to check ourselves and just come back to reality of, hey, Friday was awesome. We had some really, really, really great, amazing trades. But now let's try to be smart and strategic, protect our money, and find out where we can take our trades, right? Do we really want to be short in this fucking hole when the RSI is in the dirt? When we're really overextended on the hour, probably on the hourly, let me check. Yeah, I mean, even the hourly, it's going to catch up because of overnight, but that hourly closed almost 50 points away from the 13. That's a big reversion. Look at this. Extension, reversion, extension, reversion. like, and these are little ones, extension, reversion. Like, you'd be silly not to at least anticipate a reversion into these zones. So that's my thesis. Yeah, and now let's take a look at NVIDIA. Let's adjust this, see if it broke down. Looks like it's starting to distribute. Yeah, it's starting to break down. You could see more downside pressure. So they could drop the market, keep running it down into NVIDIA ER and then gap us up, right? That would fit the thesis. But ideally, I really would like to see the market run up early in the week and then maybe sell, like maybe see a nice run Monday, Tuesday, or even sometimes we see where that particular earnings report, the day of the earnings report that they're about to report in the after hours, that day you see the big run up, right? And that's where short squeezes happen. That's where they start forcing shorts to close out, and then whatever move they want to give happens. So either way, the market is going to be, the traders are going to be forced with a very difficult decision on NVIDIA ER. Okay. Now, let's take a look at the daily on NVIDIA. Trend line, perfect rejection. Okay. So one thing that I noticed is they could actually build an IHS out on the daily. Look at this. So you have, it's a little weird, but it could happen actually. I don't know. I'm looking at like this is the neckline. Kind of have a little bit of a shoulder there, a head here. They could bring it down into here, right? And then this would be the other shoulder, and then they could rip it, right? Not that high, but I'm just saying in general. That's something that I want to keep open-minded to. So now let's take a look at BTC. This is just garbage. Literally, it's just not doing anything. It's just fucking sideways. I think BTC is in a place where it's going to stay weak for the month of February, and then into March, as the market kind of fades out and drives, that starts to find a bottom, then you'll see BTC catch a bid for maybe April to June is what I'm expecting. So we're going to stay a little risk off and just trade it as it comes. The swings in general are going to be light, probably minimal, unless something sets up that's really good risk reward and the contracts are reasonable. I'm just not in the business right now of trying to overly swing too many things, because right now the market's just weak. And I think we're going to see a little more downside, and I don't want to be whipsawed around in swings. So unless it's a long-term put swing, meaning so our long-term puts, I would like to see that 68, 60, 60, 80, 60, 70 zone tested, and that's to swing some March puts on QQQ and SPY and catch a nice fat move down and then get out and then intraday trade, save our capital, build our positions. All right, now let's take a look at the market, the broader market. Let's take a look at NQ. Same situation setting up here. It broke through the golden pocket pretty aggressively. This is my low here, anchor low, right off that candle. This is interesting. So this weekly, first time we've had selling pressure on the weekly, full body sell. You got an M forming on the weekly. Now, I drew this out on US 500 last week. It was this head and this shoulder. And I said, I want to see this. I think this is a powerful breakout. It didn't even retest it, and it came down. So that's not looking good. It had a nice move up, but it they sold it right back down on the weekly. So it's now turning into an M. This M pattern can come down a lot more. If it does keep rolling over, we're going to see, sub 5,800 fairly quick. That's one reason why I'm leaning a little more bearish. Okay, we have bearish divergence on the daily that has not signaled on the algo, on this RSI algo. All right, let's take a look at the VIX. This is the daily on VIX. Not touched this chart in a while, but what's interesting, we talked about how the VIX was in demand zone last week, right? When it was down here, I said this thing's in demand zone. And what do you know? Fucker popped pretty aggressively. And more importantly, it rejected exactly on the trend line. Like not to the wick, but daily closed underneath it. So this is a type of setup where I'd like to see this retest, the 1634 level, that 1634 to 1670 zone. That's a bit of a volatility crush that also complements the other side of the trade that we've been talking about. Look at the signal line here, RSI's here. I'd like to see this revert a little and then go. Can it keep going parabolic and like this? Yeah, it's rare because look, this did it over there in August. It's rare, but it could do that. Absolutely it could. But typically, look what happens to the RSI. Shoots up, comes in, shoots up, comes in, shoots up, and then vol crushes, right? Shoots up, comes in, shoots up, right? This happens, especially with volatility. Shoots up, comes in, shoots up, comes in, shoots up, comes in, shoots up, comes in, like nonstop, right? So this is a pattern, not only with the market, just with the RSI in general. Now let's take a look at the bond market. We're still above a bullish risk spot, which is this line here, right there at 79.43. Let's take a look at JNK, risk on. Where are you at? It's under, this one's underneath my risk level. 60.90. 96.90. Okay, so a little bit mixed with the bond market. It's showing risk off, but it's also showing the high yield corporate bond market is decently strong. Okay, now let's run through the sectors. XLK, tech sector. Every time, we talked about this last week as well, every time it reaches, this is funny how that everything that we've talked about, it's been playing out. You can go in the video and hear me say this exact thing. I said, wow, look at every single time. Anybody remember me say this? On XLK, I said every single time we've hit this level or we've had, I said this, an extension away from the EMA on the daily, we get aggressive sells. Up, down, away, slam, away, slammed, away, slammed, away, slammed, away, and slammed. Oh, I love this fucking game. Oh, man. So that's, right now, that's one of the biggest sell candles we've had, since December OPEX. And look what they did that day. They fucking squeezed it so fucking hard back up and then slammed it back down. So there's going to become a tipping point with this, and it's most likely going to revert. You have that weekly has a W that turned into a weird M that's forming right there, and if it can come down a little lower, that would be nice. But it's in the midline. It's not really. It's pretty neutral for the weekly. All right, now let's take a look at another sector. Let's just go through the main. XLV is actually setting up fairly bullish. This is healthcare. We talked about this in this zone. I was going to hold because this zone was such a big level. You go back and you take a look at this chart. Let's just pull up the weekly. Big spot, tap, tap. Now the weekly is bull flagging out. Pretty solid volume yesterday or Friday on the week tape. That's showing you that that's more risk off, right? Moving into healthcare names. Johnson and Johnson's been ripping. A lot of these stocks we talked about has been ripping. XLC, it's overextended from the top on this weekly. This has still got, and it's got a tweezer top on the weekly. So communications. What are the top stocks in communications? Google, Meta. Those are the top two. Okay, so the communications sector should see more weakness based on this print. Why is that? Because you have an overextension away from the 13 on the weekly, and you have a fucking tweezer top at an all-time high. That's bearish as fuck. It's not bullish. So Meta, Google, Meta could continue to see more downside. Now let's go to financials. What the hell? This is bearish. You have an evening star reversal setup. Hanging man, bullish engulfing, bearish engulfing. This is an A+ setup to be shorting, looking to short financials, right? It hasn't even tested the 21. So it could come back down a bit. Personally, not interested in playing financials, but it's definitely notable based on the sector. You had, XLP, consumer staples, was up 1% and change on Friday. That's a defensive play. That's a signal to me, right? You have volume increasing on the weekly. Okay, this is multi-week, and they were buying into the move. And then they sold the market and gave it its most best performing week yet. Full body, bullish engulfing candle. Look at the volume on the daily. Beautiful, right? This is looking to go to a new all-time high. This sector, XLP, consumer staples. So the top holdings in consumer staples would be, I don't trade them much, so let's check. I think it's like Target and shit. Let me see here. So we go to knowing the basics. Take a look at the sector breakdowns that I posted in there. XLY. Where the fuck is it? Do I not have it in there? I'll be damned. I think I forgot the one fucking sector. Anyways, let me pull it up. Is it Walmart? Yeah, so it'd be like Walmart, Target. Hmm. So XLP would be a sector we'd be looking to long. There we go. Perfect. Pepsi, Target. Yeah, so the heavier sector would be Costco, Walmart. So let's take a look at Costco because I think Vince was short Costco. Costco was really overextended. Let's see what Costco did. Leading. Costco is green. Oh fuck. So this has got a beautiful hammer candle off the daily 21. Well, not really quite a hammer. It's like a dragonfly kind of weird one. So personally, I wouldn't be looking to short Costco here unless it retested, 60.55 to 60.48 and change. All right, so now let's take a look at Netflix. I mean, this thing's coming in perfect. Very nice short coming in here off that break of 33, 1,033. I expect more downside on Costco, like down into the point of control here, right at 980. You have that's pretty much it. And then XLP, so XLP, metals were down. This does not look good actually. Like this does not look good unless it creates a divergence. It doesn't look that good to me. XLC, talked about that. XLY, this looks like a great short, guys. So if there's a bounce in Amazon or Tesla, XLY is the sector we really want to be focused on shorting. XLY, Amazon, Tesla, Home Depot, Booking Holdings, McDonald's, Lowe's, and TJX, and Starbucks. So this pattern, look at this. Next support, if this thing breaks down, it's coming down significantly. If it breaks that level, which there's not a lot of supply, this thing could get fucking smoked big time. So that means, for me, I'd like to see Tesla test into the 300 range. Tesla broke a pretty big level Friday as well. Take a look at energy. It looks pretty constructive to me. We're in this nice channel on the daily. This is a big time frame view. Pretty bullish on this. I'd like to see energy hold above the 200 here on an XLE and continue to compress up and out, and then you can see a really big move in energy. It's really kind of the main sectors that we need to touch on. Now let's take a look at some tickers. Coin. Okay, so this thing obviously got smoked. It's fun. Here's a pretty big trend line coming in. That suggests that downside could be to 216. So moving forward, I'm really interested to see where Bitcoin bottoms and where Coinbase bottoms. I don't think it's over, but I do think that, because February's been so weak, that we're going to see more weakness. And then as the market finds a bottom, hopefully before or around March OPEX, then we can, we got a gap down here at 200. Then what we'll do is we'll look to long that for a long-term swing. Now let's take a peek over at really everything's kind of in the same situation. This looks like a weak stock, TSM, UTAD test coming back down, starting to take that next leg down. That could be a good short as well. AMAT, as bullish as I really want to be on this, it's starting to change the structure. And maybe it gaps up on NVIDIA, but I don't know. It looks like I don't really want to be longing this right now. LRCX had a great move, but this again, it looks like it's coming out of accumulation, but a really ugly candle coming out of it. So this thing's got to hold. Another stock that's got earnings this week that's really important I want to watch is Snow. We're going to do some data digging on Snow. I think this stock is going to beat earnings, but it depends on how they want to structure it out. Are they going to do this? Where it goes, it's up, down, and then up. So this is something I want to keep an eye on as well. I am bullish on snow. And then another one would be Dell. I'm pretty bullish on Dell as well. It's flagging out here on the daily, building a really nice bull flag. Really nice pop out of the falling wedge. MU. I don't know what the fuck this thing's doing. This thing's just going sideways now. But seriously, this is bullish as well. It's just in the midline. You really don't want to be trading this in the midline of this mid zone. You want to trade it from edge to edge. What a fucking trade, OG. OG. What's up? Did you hear? You closed out, right? Everything? Yeah, it is. Nice. Good trade on that, OG. Really, really, really nice. So what's cool about this is we alerted off the open, which was right at 25, the $30 calls for March, and they fucking ripped. They actually went on. I think they went in the money on Friday. Didn't? Yeah, they did. Yeah, 2 days. So we had a month out, about a month out swings, and they went in the money in 2 days. It's kind of been the theme lately. Swings going in the money quick. Another one I want to talk about is CELH. We'll have to keep an eye on this. Interesting setup. Maybe they do a peg, island gap up, structure it out, chop people chasing. But I want to be cautious because this RSI, here's a signal line, RSI is in the ceiling. I want to see it rug people, get back in, and then go back up. Oxy, pretty solid. I really would like to start trading some of these oil names at off some decent levels. Same with XOM. I like this. It looks like accumulation, going to drive up as of now. GME, this thing looks good too. It's just really interesting what Clay's been posting. Thank you, Clay, for all the DD you're doing on GME, because I think this thing is setting up for a big move. When does it come? I don't know. Maybe it's earnings in March. Coincidentally, that's like right on near the just after OPEX. So if you're going to trade GMA, I don't mind taking shares. Your risk would be $24. You have $2.40 of risk. That's not bad. End phase. No, don't give a fuck about end phase. Yeah, I'll take a look at ITC right now. Let me just take a look at HON. Huge breakdown. What the? Oh, they gapped it down on earnings? That's weird. That's weird. What happened? Oh, they beat again. They still gapped it down. Yeah, I'll take a look at AMD right now. Let me just take a look at INTC. Let's take a quick peek here while we're at Win. Win looks fucking great. Really, really, really nice. This is the stock we really want to be looking to as long as China holds. INTC right there. It's flagging out. We'll keep an eye on this. I like the declining volume in a bull flag above structure. Very nice. Really needs to hold 2460. Like this is a spot that it really needs to hold. Worst case scenario, you you want to see it come down to 22.57 and then hold that, and then you can relong it. Not interested in shorting this at all. I mean, you need big moves to make really good money on this. Yeah, I think Palantir is it's going to come down to 86 to 80 right here. I think it's going to fill this gap. Yeah, I want to see Palantir gap up, like up here, and then we're going to fucking load her up. There, we'll short Palantir for OG. That's what that is. Right? We'll short that fucker. I got this thing coming down into the gap. It has to. And then Carvana is another beautiful short. Damn, I wish we'd have fucking traded this off earnings. Pissed. Pissed about this. You guys have no idea how easy of a short this is. No idea. I just wasn't wasn't watching it going into earnings, and I'm a little bummed about it. Because beat or miss, it doesn't matter. Doesn't matter. It's going down. You're too extended out on the daily. And we talk about reflexivity. That's to a T. The calls got overextended, retail holding, and institutions just fucking dumped their bags on them. So I think this thing sees a lot lower. AMD now. Let's go back to AMD. Then we'll get into China and then wrap this up. Let's take a look at the put to call ratio. Put to call ratio is fairly neutral, leaning a little bit to the heavy on the put side. Yeah, a little bit high on put to call side, but nothing crazy. Fairly neutral. And DZ, where you at, DZ? Okay. Yeah, this thing's going back down. It needs to hold 110. It's pretty much right here. If it holds 110, actually, yeah, it has to hold 110, OG. We could actually play this long. So one thing I want to talk about too is like daily candles. Like a lot of times when you get really nasty moves on daily candles, you will see a reversion, 50% retrace. 50% retrace on AMD would be a hell of a trade. That's a $3 move roughly on the stock, right? So even on the daily on US 500, if you look at it, or on QQQ, like that's a big reversion. It's still bearish if it reverts halfway up. Now let's take a look at US 500. Here's the daily. What's a 50% retrace of 100 points? $50, right? Or what was the sell? 110. Oh, it was up here pre-market, so it was at 127. 127 to it's a 120 point move down from pre-market high down to the low. So 120 point move down, it's a 60 point move back up. So 60 points, 50% retrace of 60.12 is 60.72. That's the level we just talked about. We want to see a reversion back to and see it weaken or fail around that zone between 60.70 and 60.90. Maybe they overshoot a little and then it weakens and fails and then we fucking take that bitch down. All right. Next stop is China. China, ping pong, ding dong. Gotta love China. Ayo. Ayo, ayo, ayo. All right. So here's my dollar pattern. Vince has a little bit different patterning than I do. To me, yeah, I'm still confident on this move. I don't think it's going to go down this far though. I'm going to adjust this a little bit. Let me go like this. So nailed this move down, nailed down, nailed it there. Down. Oops, hold on a second. Down, there, up. And give me one more low. That could happen. It's basically same shit, just a little more compressed. Yeah. So that would look like 1, 2, 3, 4, up, down. All right, I'll leave that there. Yeah, so it is an IHS still, but it's just more compressed up. I could see that very easily happen, and then short leg in the dollar. That would mean so then PDD, which is a stock that has earnings this week. They have oh no, they don't. What? Why is everybody saying they have earnings this week? That's weird. The fuck? Hold on a second. Let me check earnings whisper. So check. Nvidia's Wednesday after close. Kava is actually pretty bullish. I'll post this here in the channel that I'm looking at. I'll post this in the earnings channel too. So those are the earnings. Look in the chat. You guys see anything you like off that? To me, I've seen some pretty bullish stuff on Kava. And then we have, all right, so Monday, there's nothing for data. It literally is just a 2-year note auction on Monday. Monday, yeah, so economically, there's then Tuesday, we have consumer confidence, nothing crazy. Then we have 5-year, nothing crazy. Vice chair, Barr speaks on Tuesday, nothing. So Tuesday's a nothing burger. Monday and Tuesday, really, there's no data that's significant. I'm posting this in the economic data right now as we're talking. And then I'm going to go and do one more. So that's then Thursday. Woo! Thursday, Yahtzee. We have continuous jobless claims on Thursday. We have GDP. Bowman speaking. GDP and Bowman. So like everything's kind of ramping up on Thursday. And NVIDIA ER. Thursday. Okay, Friday. Friday's the big day. So wouldn't it be some shit if they held the market up all the way until Friday? So Friday's PCE. This is a big deal. PCE, they have PMI right after open. That's a big deal. That usually dumps the market too. Interesting. Oh boy. Based on what I'm seeing right now, I don't think, like, I would be very shocked if we absolutely die Monday, Tuesday, uh, in the market. I'd be very, very, very Monday, Tuesday, Wednesday even. I'd be very shocked. I think the market's set up to go up into NVIDIA ER and off of NVIDIA ER and then dump. That's how it looks like to me, based on how the economic data and how earnings are set up for it. So I just posted everything in the, yeah, Dell is bullish too. So, yeah, we have Riot, like, because think about it, like, everybody's so bearish right now. Like, a lot of people are. They're like, oh my God, right? And I thought PDD reported this week. I guess not. Am I wrong? They do? No, I don't see them. Oh, C3AI does. Whoa. Let's watch. Let's take a look at this. Oh my God, this stock's gotten fucking rolled, steamrolled. But look, this is still in play. This is a perfect example of a failed falling wedge breakout. Breaks out and fails, but the back test is still in play. So we'll keep an eye on this. This could be a dirty little earnings play here. They could squeeze this. What did they do in the past earnings? Massive beat. Massive beat. Oh, beat across the board. Oh, interesting. They really haven't been selling a lot of shares on this move. Just kind of a little bit here, a little bit there. Zoom. Oh, Zoom. That's a good stock too, actually. I'm bullish on Zoom. And also Zoom is a COVID play too, which I'm also going to bring up Moderna. We talked about this a little bit, been bullish on that. Zoom, I don't know. It's creating an IHS on the daily, actually. Interesting. So we got some good stuff. Moderna, I really like this moving up. It's coming out. Look at this big channel. Tap, and they're just sliding down the channel. And then not this past week, but the week before, Dragonfly Doji on the weekly off of a huge level, 29.50, which goes all the way back to previous all-time high before COVID, right? That was a back test. And, $5 million hit the tape for October in a block at the money calls. Last 2 weeks, bullish, buying last 2 weeks. So, we can see a lot bigger move up. I like this. I'm going to keep an eye on this one. This might be a really nice play. All right, what else do we got? Riot. I mean, yeah, that looks good. I don't mind Riot. I think taking that long's probably the play. If you want to take an earnings lotto, we'll definitely keep an eye on HD. HD's got earnings coming up pre-market Tuesday. Let's take a look at this weekly. Looks like a distribution top to me. Yep. I'd like to see it pop up and then dump. Yeah, this does not look good. And then who else has earnings? Coterra, Chegg, it's a squeeze stock. I think. No, it isn't. That's Chewy. Lucid, Instacart. Oh yeah, Kava. The stock's been a beast. But this looks like, oh my God, this does not look good either. Hmm. First Solar. Oh shit. Oh boy. This duck. Oh boy. Look at this. This weekly is pretty dirty. Nismo would like this. Sitting on the weekly 200, just underneath it. If it misses, it's going to 110, 106, 106 to 122. This thing could the bottom could, oof. Look, interest rates not coming down is not gonna be good for these. Like they're still gonna get smoked. But if they beat ER, which last time they had ER, they missed pretty large. Interesting. Let's now wrap up with China. We talked about the dollar. Let's talk about Tiger. Tiger's consolidating here. I still like it to move up, but we really it has to hold this like $8 level, 805. Baba is just on crack cocaine. It's just going parabolic. It's dangerous to long. That's why I haven't been alerting it as much lately because we captured a big chunk of the move. So now it's just more like let's just figure out where our risk to reward is. Look at the RSI; it's just going nuts. I want to see this thing give me a breather, and then we'll take it long. PDD's next up. I think it's the next Baba that's about to make a parabolic move. Really nice movement here coming off this low. Let's just wait and be patient. I think this week will be a nice week to maybe catch a dip on it and then let it rip. Or we're going to have to get in right away on Monday. It's one of the two. So we'll be keeping an eye on this. All right. Oh, yeah. Let me turn on that channel. Hang on a second here. All right. Read. There we go. Honestly, I don't. Hold on, let me go through a couple of these. I want to keep an eye on Baidu because those big traders in the $100 calls, they never left for March. They did break us down and then started to rip it back up. So we'll just keep an eye on this. This is really interesting what's going on here with Baidu. Because all the China's ripping, Baidu's beat, I mean, big beats, nice beats. I won't say big. So we'll keep an eye on it. HSY looks great. Breakout to the top of the falling wedge. KWeb looks solid too. Fu2 as well. Now these are looking a little toppy. Billy looks like it's look like some of these small caps look like they're ready to play catch up. Like Billy, PDD is not small, but it has the same look. It's like it's ready for the next move up. I like to play stuff that looks like the index. So like here's the index. I like to play stuff that looks like it's setting up to move like that, like this, right? Or like this, right? Or like this, same thing. It's shooting up. KWeb, same thing. Obviously, there's that. What else? Tiger, same thing. I think it's not the same. Still breaking up and it's consolidating. So I would like to see it to break 36, but it needs to hold 805 to $8. All right, so OG wanted me to take a look at Airbnb. Oof. Oof. I hate this company. All right. I don't know if it's a short, bro. It just got smoked down and they just gave back all its gains. I think it'd be careful. This is a tough stock to trade too, to be honest with you. Like it's a pretty challenging stock unless you just catch a huge perfect direction on it. Like look at this. Chop, chop, chop. Yeah, I personally will stay away from that. Definitely keep an eye on Dell. This is a bullish setup. That's about it. Anybody have anything else they want me to say, take a look at or ask or any questions about what we covered? I'll be looking at Moderna long right out of the gates this week, guys. Be taking a look at snow too. Let's see how this acts. This might be a nice IV pump into the earnings. Like they could run it right back up into the consolidation. So we might take calls to IV ride it. Yeah, we open it up in 15. Yeah. All right, I'm gonna take a break here for like 10 minutes, and then I'm gonna come. I'm gonna leave this stream on US 500. Oh, hey, they just opened it up. Oh, they did. Hey, oh, what? Hey, what did I say? Gap. I knew we weren't gonna gap down. No fucking way. Nope. No fucking way. G. Oh shit. Let me go back here. Yeah. Let's see what they do with it. You have RSI is starting to revert on the hourly. Let's take a look at the 4 hour. It's got a long ways to go on the 4 hour. Yeah, I mean, now we're above the golden pocket. This area, if you guys look at the 15-minute and it closed, look at this. So if you're overnight trading, I would like to see it come back test the zone, and maybe backfill the gap a little and then build structure back up. But really, it needs to get over 60-20 and hold 60-20 where it's at now for it to be bullish. Other than that, I'd probably see a backfill, but we'll see. I mean, this thing could very easily just go like this and then come down, and then they could reaccumulate and then go up. So we'll see. All right, guys, I'll cut the stream here. Good stuff. If you have any questions, please ask. Just please ask. We're here to help you. By the way, we are doing beta testing on the AI. So we're going to be shutting it down every weekend, shutting that channel down. And just be patient with us with that. And other than that, have a great evening. And I'll see you guys in chat. All right. Peace, guys.